I've seen 12% returns in my TSP fund for the last 12 years. But that doesn't mean that I'm going to be getting 12% returns for the next 10 years. I have no idea what my returns are going to be for the next 5 years. But I do know that in the long run, we tend to have more winners.
Welcome to the Military Money Manual podcast, where every episode is all about achieving financial independence in the military faster than before. We believe personal finance shouldn't be boring or intimidating. Building wealth can be simple, and financial freedom is the ultimate financial goal. Now, here's your hosts, Spencer and Jamie.
Hello and welcome to another episode of the Military Money Manual podcast. Spencer Reese here from militarymoneymanual.com, joined by Jamie, co-host. Hey, Jamie.
Hey, Spencer.
Today on the podcast, we're talking about the thrift savings plan. It's one of our most popular topics that we have on the podcast. And we're going to go over a couple things, but really the point of today's episode is to peel back the curtain, take a look at the numbers, and figure out what would happen if you maxed out your TSP account every year that you were in active duty service. And we'll just assume you do a normal 20-year career. And what would the numbers look like? How would it turn out? So we'll talk about some contributions over your investing lifetime, investment returns, what you can kind of expect, the kind of numbers that we use. For this, we actually used a Monte Carlo simulator, and I'll talk about what that is for anybody who's not familiar with that. Sounds pretty fancy. It's actually not. It's pretty basic. Asset allocation, talk about like how you can invest the TSP, always a popular topic. And then plans for after military separation to retirement. To start the episode off, there's a lot of TSP millionaires out there. According to federalnewsnetwork.com, at the start of 2024, there were over 95,000 TSP millionaires. So there's a lot of people out there who have a lot of money in their TSP. And the easiest way to become a TSP millionaire is just consistent long-term investing and picking a good asset allocation that matches your risk profile.
And if you're not one of those 95,000 TSP millionaires, it's okay. You're in good company because I do not have over $1 million in my TSP account. So what's important is that you make the contributions over time, little by little, and eventually that compound growth takes over. And so that's kind of what we're trying to show you is not, you should be a millionaire by the time you retire in your TSP account. You should have over $1 million in your TSP account. And if you don't retire, that's even okay. But it's important to know that you can still build wealth whether you do a 20-year career or not. And the TSP is a very easy and great opportunity to build wealth while you're in the military, no matter how long your career is.
Yeah, so for my personal story, Jamie, I joined active duty in 2010 out of ROTC. And in 2010, I looked back at tsp.gov and I contributed a grand total of $274.56. And today, my TSP account is well over $300,000. So, you know, like they say, from tiny acorns, great oaks grow. And it started slow for me. Like in 2011, my first full year of active duty, my second year of service, I didn't contribute anything to my TSP. And the numbers are right there. If I go to tsp.gov, I can look at my contributions for 2011. Nothing. I didn't put anything into it. I was maxing out my Roth IRA. And I think I put some money into my wife's Roth IRA as well. But I didn't contribute anything in 2011 or in 2012. So it wasn't until 2013, 3 years after I was active duty, that I started putting significant money into my TSP. And I think a lot of that came from, I just had the time to finally research, like, okay, what is the TSP and what should I be investing in and how can I make the contribution? And I ended up contributing $10,000 my third year of active duty into my TSP. And it was the next year, in 2014, that I maxed it out for the first time. So as a 4-year captain, 4-year time in service, 03, I was able to max out my TSP for the first time.
And I also looked up, Spencer, my stuff. My history in my account doesn't even go back before 2012, which I guess means I didn't contribute anything for my first few years. And when I did, it wasn't anywhere close to maxing it. So again, you're in good company if you're not quite there yet. I had like my first year of contributions in 2012 was 3 years after I started active duty, and I did about $1,700 in contributions, and I was in a really crappy life cycle fund, not even one that matches my estimated retirement age, and more than half of my contributions went to the G fund. So like many people have a story of you may have started contributing, but you didn't really know what to do with it. And that's where I started for a couple of years as well. And then I stopped contributing. I think that's when we finished getting out of debt. And then the next year I picked up with small contributions again, but it took me a few years to start maxing mine as well. So it happens.
Yeah, I think like a lot of people listening to this, they feel like they're failures if they're not maxing out the TSP, but that is not true at all. Let's set the bar pretty low here. If you know what the thrift savings plan is, if you know what the TSP is, if you have your login details, you are probably ahead of your peers. Now, if you're contributing 5%, if you're in the BRS, the blended retirement system, or even if you're not, if you're still in the high 3 and you're contributing 5% to your TSP, you are doing pretty good. That's a great start. I mean, I would say there's room to grow from there. And I would say that like for the right person, I would say that's not enough. You should probably be doing more than that, especially if financial independence, if early retirement is something that you're considering, is something that you're thinking about, or something that you're saving for, a goal that you're working towards, then you should probably be doing a lot more than 5% into your TSP.
Yeah. So anyone that's active duty now, especially if you're under the blended retirement system, you joined in 2018 or later, or you opted into it if you had that opportunity, depending on if you joined slightly before 2018, you're ahead of where Spencer and I were for our first couple of years, because they're going to auto enroll you with a 5% contribution into the most applicable life cycle fund. And so you're just automatically getting that plus some 1 to 5%, depending on how long you've been in, contribution and match from the federal government. You're starting better off than where both Spencer and I did. And a lot of times we talk in the podcast, it may make it seem like we have everything together, but just want to reassure you, one, we don't, we still mess up. And we both also kind of got slow starts. So we're right there with you.
Yeah. So slow start. 2014 was the first year that I maxed it out after being in for 4 years. And then from 2014 to 2021, for 8 years there, I actually did max it out every year, which was, looking back at the numbers, I was like, wow, that's I'm pretty proud about that. It's pretty exciting. For a finance nerd like me, $17,500 was the max in 2014. And then by 2021, it had grown to $19,500. This year, 2024, we're looking at $23,000. So I think that that also really demonstrates how much inflation has started to chip away and eat away at our purchasing power just in our investing lifetime, Jamie.
Yeah. So when we look back at your TSP account, Spencer, how much did you end up contributing? Because now that you're out, you're off active duty and you're not even in the reserves or the guard anymore, you can't contribute anymore, right? So what was your total contributions over your career, if you don't mind sharing the data?
Sure. Yeah. So until I left active duty in 2022, I contributed $174,900 to the TSP. And in April 2024, I just checked my account balance now, it's about $385,000. So there's over $200,000 of gains in there, and also some matching as well. I left active duty 2 years ago, and I'm not saying all those gains came in the last 2 years, but it just shows that I've been investing in the TSP seriously since 2013. So in just an 11-year time period, I'm already seeing compounding interest go to work for me. My average investment returns over the time period, so I stuck this into Excel and worked out the IRR, internal rate of return, but it was about 12% annualized, which is right on track with the trailing S&P 500 10-year return of about 12.7%. So you can see right there, I wasn't all in the C fund. I had some S fund, I had some G fund, I had some F fund in there, and still I was annualizing about 12% annual returns in my TSP.
Oh, that's awesome. Those are some good numbers and right on track with kind of the averages that we talk about with the historical stock market return. And it's done pretty well through your career. But if we went back and looked back all the way back to say 2004, if someone was coming up on the end of a 20-year career right now, we saw some pretty big dips in the stock market, like 2008 with the housing market crash. Would it still be okay if we went back and looked at a 20-year career?
Let's run the numbers for 20-year career. So I did a 5,000 iteration Monte Carlo simulation. So basically what this does is it's a means to test long-term expected portfolio growth and portfolio survival. You can use historical returns, historical inflation data. And so what it does is it kind of goes through and it's like, okay, what happens of these 5,000 examples? Let's take the worst inflation, the worst investment returns, and that will be, case number one, and that's the absolute worst. And then it'll go through, okay, well, what if the inflation wasn't so bad? What if the investment returns were a little bit better? And it just goes through and it mixes and matches all these variables and runs 5,000 different permutations of the scenario and to see like what your investment portfolio would turn out to be. So in this case, if we contributed the max amount to our TSP over a 20-year time period, it's pretty impressive actually. So let's say we started in 2004, the amount that you could contribute to your TSP in 2004 and max it out was $13,000. So by the time, let's say that you did a normal 20-year career, you left in 2024, it would be $23,000 for your max contribution there. So, what kind of investment returns can we expect? Well, in the 10th percentile of the Monte Carlo simulation, this was a 10,000 portfolio Monte Carlo simulation. So I used portfoliovisualizer.com, by the way, if you want to run this yourself. It's a pretty nifty tool. I use the paid version, but the free version is also like really powerful. In the 10th percentile of this Monte Carlo simulation, we're looking at a 6.5% nominal return. So that's before inflation. And in this case, inflation was really bad. It was about 4% average. So 2.38% was the real return. And you ended up with an account balance of $3 million. So not bad. And that's in like the 10th percentile. So that's in like some of the worst case. If we look at kind of like the closer to the average return of the US stock market, that's about a 10.5% return. The account balance was $10.5 million. And this is assuming that you maxed out the TSP for 20 years and then you didn't touch it again for 20 years. So let's say you started in the military at age 20, you contributed to your TSP till age 40, and then you started touching, or you looked at the account balance at age 60. So that's kind of the time periods we're looking at there. And then if you were lucky, let's say you were in the 75th percentile, $18.8 million in your TSP.
Well, that'll do.
Yeah, that'll do. And then if you're in the 90th percentile, so you just absolutely nail it, maybe your 20-year period ends in like 1992 and you just catch the tailwind of this 20-year boom, you're looking at $31 million in your TSP. So those are all nominal numbers. So that's all not inflation adjusted. But even the inflation adjusted numbers, you're looking at the average at the 50th percentile, 2.2 million. And that's in real dollars. So that's, assuming a 4% rule and every million you can live off of $40,000, that's not a bad chunk of change.
All right, Spencer, let me play devil's advocate here for a second. I know we have listeners out there that are saying, yeah, but it's not realistic to max, especially my first year in the military, whether it's officer or not. What would you say to someone like, yeah, okay, we're giving you an example. Obviously, not everyone's going to be able to max it. We didn't even max it for our first year, if not first few years in the military. So do these numbers even mean anything to me if I can't max it right away?
Yeah, I think it's a fair point, Jamie. Almost nobody's maxing out their TSP from day one. I didn't do it. You didn't do it. So whether, it's ignorance or laziness or you just don't know better, or most people aren't making enough money their first couple of years in the military to think about maxing out the TSP. So I'm not even saying that this is realistic. I'm just giving some examples of the numbers. But hey, let's take a realistic example. Like I left the military after 12 years of active duty service. My TSP account was probably about $350,000. What if we just left that invested for the next 25 years? What would, in the C fund or in like 80% C, 20% S fund to mimic a Vanguard total stock market index fund? What kind of returns would we see? And you can plug this again into like a Monte Carlo simulation. For my portfolio at age 60, I can expect anywhere between 1.3 million in the worst case, 4.3 million in kind of the average case, and 12.3 million in like the top 10% if I get super lucky. So I think it just shows like right there that you don't need to get this right all the time, every time. You don't need to be the person who maxed out your TSP every year for 20 years. But there are some people out there that do that. I know that there are people who have contacted me and they're like, hey, I just lived off of my USAA career starter loan or my Navy federal career kickoff loan for the first year. And I maxed out my TSP my first year as a lieutenant or an ensign in the Navy. And I'm like, man, good on you. Like I was not that person, but those people are out there. So, what can these kind of people expect? Well, hey, you might get lucky and end up at age 60 with a $31 million TSP portfolio. That's pretty cool.
Yeah. And even if you can't max it out, the compound interest is just going to take off. So I just ran a quick calculator. Investor.gov has one of my favorite compound interest calculators. So if you Google search compound interest calculator, that one pops up and it's really good. I did a no initial investment and just $500 a month for 20 years with an 8% interest rate on average, let's say. With annual returns in 20 years, it'd be $275,000 with just $500 a month, which again, that might be hard for some to do your first year in the military, but for people after 3, 5, definitely after 7, 10 years in the military, you should be able to get to the point where you're contributing $500 a month. I never thought I would see $275,000 in any of my bank accounts. That was not something that I thought was ever a thing. So a lot of our listeners may be in a situation where even having 6 figures of net worth may be mind-blowing to them. And just $500 a month is $250,000. And if I make it $1,000 a month, which again is a future goal for a lot of people, now we're talking over $500,000. And that's just for 20 years. And then I leave it alone, and then it's going to double every 7 to 10 years. And by the time you're at retirement age, you're a multimillionaire.
I think, when I started contributing my TSP in 2010 and I put $275 in there, I probably thought, man, it's going to take me 100 years to get to 100,000. And it didn't. And I remember I was probably, after I've been contributing to the TSP for, the crazy thing is like I probably only hit $100,000 in my TSP in like the last couple of years of my military service. And that's just the power of compounding interest, right? It's like you can be contributing, and you finally crack that $100,000 TSP account balance mark. But then the next $100,000 might only take a couple of years because now you've got all that $100,000 just, generating dividends, generating growth, generating returns, and you're still making contributions on top of it. So before you know it, $100,000 becomes $200,000, and then it becomes $300,000. And then when I left active duty, I'll have to go look up the exact account balance, but I've probably added another $100,000 just in growth since I left active duty in the last 2 years.
Yeah. And if you take that money when you leave the military, whether it's after 4 years or 10 years or 20 years, and you leave it alone until retirement age, which you're going to do because it's a retirement account, you're going to have multiple more decades of growth on your side, which is really where it takes off. So when I look back, we talked a bunch of times about how I use YNAB for my budgeting. And I look back at where it was for my TSP account history when I started using YNAB. I'm like, wow, that's quite a small amount. But now, now it's well over 6 figures. I've been able to max it out. It's just growing. And now it's kind of just on autopilot. So this is one of the ways that Spencer, you talk about in your book is automatic investing. And that is one of the best things about the TSP is it's easy to do. You're auto enrolled in it. You get a match and it just happens in the background. As long as you don't go in and touch it, you're going to have a pretty solid A to A- investment strategy just if you go with the defaults that the government gives you, right?
Yeah, absolutely. I was just looking at my annual statement from the TSP in 2022 when I left the military, and by the end of the year, I didn't even have $300,000, and now I've almost got $400,000 in there. So again, I'm not making contributions for the last 2 years to this fund, to this retirement account. I'm making contributions to other retirement accounts, but not to my TSP. So it's kind of neat to watch it just grow organically, because sometimes you're when you're contributing to your Roth IRA account, you're like, okay, yeah, it's $8,000 more than last year, but I put in $6,000. So
yeah.
I only had $2,000 worth of growth. But so is this whole compounding interest, everybody else is getting 26% returns in the stock market. Doesn't that mean that I should be getting, and you probably are, but sometimes when the numbers are smaller, you're like, okay, I wish the numbers were a little bit bigger here. But I think it just goes to show that compounding interest does work. And if you just leave the accounts alone after you leave active duty, and you do have the option to roll the account over to a IRA or to another 401k, and that might be a good option for you. Some people like to have a more DIY approach to that kind of investments. I kind of accepted it as look, it's a low cost. It fits my investment philosophy, right? It's low cost, it's automated, it's diversified, it's simple. I'm just going to leave it in the TSP. When I get to age 59 and a half, then I've got options, right? I can start drawing down from the Roth account, or the traditional balance, depending on what my tax situation is. And I think that's a great time to reach out to a CFP or a CPA and say, hey, optimize this. It's okay if I get it wrong, but I'd rather get it right and save a couple $1,000s on taxes. Just a quick note from one of our sponsors, and then we'll be right back to the show.
It's no secret Spencer and I are both huge fans of the Thrift Saving Plan, the military's version of the 401k retirement plan. We've both been investing in the TSP for over 14 years and are thrilled to announce we've consolidated all the information you need to know into a new course called the Confident TSP Investing Course.
That's right. The course is a comprehensive guide to navigating the TSP, breaking it down to easy, bite-sized chunks that lay out the basics of the thrift savings plan, the funds available, and the investing strategies so you can build wealth while you serve.
We both know what it's like to be a beginner and to be overwhelmed with all the information that's out there about investing in the TSP. Head over to militarymoneymanual.com/TSP, Tango Sierra Papa, to find our simple breakdown of all you need to know. You get lifetime access, and we'll have a growing library of content. And one of my favorite parts about the course is that for every course we sell, we're going to be donating one to an E4 or below.
Yeah, I love that feature of the course, Jamie. So if you're an officer, an NCO, a senior NCO out there, and you purchase a course, first of all, thank you. And also know that you're helping a fellow service member, a sailor, a soldier, a Marine, an airman, a guardian, a Coast Guardsman, E4 or below, take one step closer to their financial success.
The link's in the show notes, or head over to militarymoneymanual.com/TSP, where you can sign up for the Confident TSP Investing course. Now, back to the show. Spencer, you mentioned some investment returns and some annual percentages that you use for your calculations. So let me go back to my devil's advocate hat. How do I get 12% returns? That's not possible in today's stock market. I don't see that anywhere. I guarantee you there's people thinking that. Again, I'm playing that role. What do you say to that? And how are you getting 12% returns, and where on earth are you getting a 12.7 S&P 500 return? That's not possible.
Yeah, this is what happens when you start looking at like long-term averages, right? Because if you look at, okay, what has the stock market done this year? I mean, maybe it's up like 6% if you look at the S&P 500 until like at the time of this recording, mid-April 2024. If we'd recorded this 2 weeks ago, we would have been like, shoot, we're off to a great start. We're up 10% for the year, right? But guess what? Last couple of weeks, there's been some instability in the Middle East. There's been some oil problems. Gold skyrocketing. Okay, stock market's down a little bit. If you have this myopic view, if you're short-sighted, if you're just looking at what has the market done in the last day, the last week, the last month, the last year, even the last 10 years, you have to keep zooming out and you have to look, okay, what does the market do over multiple 10-year, 15-year, 20-year periods? There's a cycle to it. You can start seeing patterns where you're like, all right, it goes up for quite a long time, then it comes down. There's these great like bulls versus bears charts that you can see on there where you can see, the bull markets last for years, and then the recessions and the downturns, the bear markets are a lot shorter. They're usually like 2 to 3 years, but sometimes they last a long time and people start getting depressed. It takes a long time for the market to recover to its previous all-time high. And that's when, the doom and gloomers come out and they're like, oh, here comes the next crash. We're back at the all-time high. But guess what? It sets another all-time high. And that's the crazy thing that like, if you haven't been investing for a long time, or if you don't have that long-term perspective, if you haven't read, the classics like A Random Walk Down Wall Street, or The Little Book of Common Sense Investing, or J.L. Collins' The Simple Path to Wealth, one of my absolute favorites, because he just has such a great way of showing you like the market usually in the long run goes up. In fact, I don't think there's ever been a 20-year time period where the US stock market's been down. Even in like the 10-year period, it starts dropping pretty quickly, so that I think only like 7 to 10% of 10-year periods have ever been negative. But what's crazy is, so we use these terms, like, okay, average stock market growth after inflation, 7%, or maybe it's 10%, before inflation, or like I've seen 12% returns in my TSP fund for the last 12 years. But that doesn't mean that I'm going to be getting 12% returns for the next 10 years. I have no idea what my returns are going to be for the next 5 years, the next year, the next decade, the next couple decades. But I do know that in the long run, we tend to have more winners than losers when you buy the entire market, when you buy an index fund. We were looking at this chart from Personal Finance Club. Jeremy Schneider's got this great channel on Instagram, Personal Finance Club. And he talks about how in the long history of the S&P 500, it's been about a 10% return, right? But then if you actually look at the years where it's done a 10% return, there aren't really any. There's 6 years that did between an 8 to 12% return, but I don't think there's a single year where it did exactly a 10% return.
And that's all the way back to 1926.
Yeah, exactly. So that includes the 1929 stock market crash. So there's lots of years where it's been up over 20%, but there's only 6 years where it's been down more than 20%, over the entire year. There's been moments, and that's the thing. The other thing that a lot of people don't understand is like intra-year, like inside the year, a lot of times there's like 10%, 20% corrections that are just recovered by the end of the year. I mean, the COVID crash in 2020, that was about 30 days, and then we recovered back to the previous all-time high. And then the stock market went on a ripper for the next 3 years until 2023 when it was, 2022 when it was down 26% or something. So it's important for people to recognize that I'm not getting a 12% return. The only reason I know I'm getting a 12% return is because that's what I got for the last 12 years. I don't know what my return is going to be in the future. It could be 10%, it could be 15%, it could be 0%, it could be negative. But what I do know is that unlike other assets like gold, like Bitcoin, like oil, the Japanese yen, I don't know what else. And it does require a little bit of a leap of faith here, but I do know that US companies and global companies will continue to produce products. They will sell the products, they will make a profit, and they will return some of that profit to their shareholders, and they will increase the value of the capital that's been allocated to them. That's just what capitalism does, and that's what it has done over the last 100 years. And there's been no greater wealth generating machine for the average person than the United States stock market. Jamie and I see these TSP investment groups out there that are like, okay, time to move all to the G fund. Oh, nope. Now we got to move all to the C fund. And it's just guys, you will find a strategy that works. I guarantee you. There will be strategies that when you back test them, you're like, oh, this is it. If we just do this and we move January, we move to the G fund, and May we move to the C fund. Yep, I bet you can find a strategy that outperforms the S&P 500 over the last 100 years. What I guarantee is going to happen is if you follow that strategy exactly for the next 10, 20, 30 years, you will underperform. And that's just the way it works. If there was a strategy that starts working and people notice that it starts working, then everybody's going to pile into it and the strategy is going to stop working. That's just what happens in the stock market. Yeah. So, I'll wrap up my Spencer rant, but I've been getting a 12% return, but it's not guaranteed. It's not a sure thing. I don't use 12% when I'm forecasting my future returns. I think the last 5, 10, 15 years, we have seen really good returns in the US stock market. And I don't know how much longer they continue. Maybe they can continue, through the rest of my investing lifetime, and that'd be great. I'll end up a billionaire if I can just hold on. But look up mean reversion. There's always a reversion to the mean. If you have super outperformance for several years, you got to expect that you're going to have a bill to pay at some point. And what you do when that bill comes due, right? When you see the next COVID crash, we're entering a period of a lot of Middle East instability. We might see some really red days in the stock market. What you do on those days, whether you just tune into the news if you want, but stay off of your investing apps. Unless you're adding more money that you can afford to the app, don't try to time this. So many people I have heard are like, okay, we're going to be short selling or buying puts, or I bet the market's going to be down on Monday. You have no idea. It could be up. We'll see what happens. But I do know that investing in the TSP for the long run is a winning strategy.
So Spencer, before we wrap up, I just want to give a couple really practical things from tsp.gov. If people are curious about their contribution history, once you log in, up at the top, there's a menu, account balance history. And from there, there's a drop-down window for every year that you've ever contributed to your TSP. You can see by year how much you contributed and what your funds you were in, and whether they were tax exempt, traditional, Roth, whatever. So Some years I was in not a great life cycle fund. Some years I was traditional. Some years I was Roth. And I can go back and look at all of that history, as well as in the tsp.gov website, you can change your contribution both for your incoming money and the money that's already there. And we explain that in our course, the Confident TSP Investing course. And that's militarymoneymanual.com/TSP. And if you're an E4 or below, we give you the course for free thanks to the other people that buy the course. So E4s and below, all you have to do is send us an email, tsp@militarymoneymanual.com, and we will reply to that email with a promo code for the course, and you get it for free. That's all thanks to the other people that have purchased it.
Yeah, and I just wanted to make it clear, like we have E4 courses to give away. Like we have had purchases from other people, and so we have plenty of free courses to give away. And you're not taking a course away from anybody else if you take a free course. So please, if you're an E4 or below, go ahead and email us, tsp@militarymoneymanual.com, and we'll get you a promo code for a free course.
Yeah, not only is there no catch, anyone can do it. It doesn't have to be like we donate it to some anonymous E4. If you're an E4 or below, you reach out to us and you get a donated copy. We've also had people, hey, my brother-in-law is a young sailor in the Navy. Can I get a donated course for him? Absolutely. No problem at all. And in the course, some of the videos that we have walk you through screen shares of how to change your allocation, how to look up your account, and lots of good information like that. So check that out again. That's militarymoneymanual.com/TSP.
Thanks, Jamie. I hope you got value from the podcast. 5-star review on Spotify or Apple Podcasts is the easiest and best way to say thanks to us. We appreciate it. And if you got any questions, reach out. Instagram @militarymoneymanual or podcast @militarymoneymanual.com is our email. And we'll catch you on the next episode of the Military Money Manual podcast.
Thanks so much for tuning in to this episode of the Military Money Manual podcast. If you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This helps others find the show, and we really appreciate it. Thanks again for tuning in, and we'll catch you in the next episode.
The views and opinions presented here are those of the speakers and do not necessarily represent the views of the DoD or its components. Reference to any commercial products or services does not constitute DoD endorsement of those products or services.